All right, what's going on, everybody? It's Sunday, 3:30 p.m., September 6th. I have a new guest on the channel today. This is my good buddy back from college. His name is Rishabh. He is working at a crypto company and he has some uh, private equity background. Am I right?
That's right. Yeah. So I've had all the jobs you could say. Had a traditional finance upbringing, worked in investment banking for 3 years, did private equity for a while, worked in restructuring, but more recently moved back to New York and started working in the tech world. Joined ZocDoc as my initial company, and now I work in the crypto space. So a lot of varied experience.
That is great that you're working in the crypto space. Join the dark side.
Yeah.
I love it. I love it. So, why don't you sort of tell us, first of all, what your thoughts are on the last week of trading? I mean, we had a pretty volatile week. What do you think?
Yeah, I mean, certainly it was a crazy week. You can see from the chart, like the S&P has had a pretty strong uptrend. And, this week was the first time that the tech names really got hit. There was obviously the news that leaked about, SoftBank and what they were doing in the options market. That rattled some investors. We had the news that, Tesla was not going to be added to the S&P. That probably, after hours shook the markets a bit. So just a lot of news that came in today. I think there are a few themes. One, it could be that the tech names have run up for a long time. Their multiples are pretty high relative to historical norms. And so there was long overdue for a correction. I think that's part of it. And the second piece is there could be some rotation between the tech names into more of the cyclical plays. But overall, I think it was just a correction that was long overdue. But love to know your thoughts.
Yeah, I mean, personally, the story that you brought up about SoftBank, I think that's really fascinating because just to give our viewers a background, SoftBank was one of the NASDAQ whales that was going into the market and basically buying out of the money call options on, some of these big stocks like Apple or Tesla, whatever they had on their list. And I want you to sort of expand upon this, but basically on the other side, when SoftBank is buying these call options, you have a dealer on the other side who is effectively short gamma, i.e. they are selling you the call options. So in that particular instance, when they're selling you the short options, if they are short gamma, they are selling you the call options. So they are initially short. So that means they have to go out into the market and to hedge their own position, they have to buy the underlying stock. Did I get that right so far?
Yeah, no, that's perfect.
Okay. So what we have effectively is, two parties effectively driving up the market, right? Because you can look at SoftBank as one of the parties who's buying these call options, and you're probably looking at, footprints on the order books, and someone is probably seeing this purchase of massive amounts of call options. And then there's probably other people joining into the frenzy. And then on the other side, you have the dealer going into the market and probably buying up all the stock. So you have all this just being printed, on the L2 data. So do you think that essentially SoftBank and some of these other, because I think there was a data point of, there's numerous people I think involved other than SoftBank who are involved in, this big bet on call options as well as stocks. So it couldn't have just been, one entity, right?
Sure.
So do you think that this is really the only reason why the market had gone up, straight up parabolic? Or do you think that, this is really what people believe, that this is where stocks are valued?
Yeah, I think it's, I can't say that this is the only reason. I'm sure it was a confluence of a number of different factors, but the way I think about it is when people trade, they look at signals, and that's both retail and also institutional. And a lot of the signals you mentioned, are, they're the ones that get looked at. And so if you have a lot of open interest in a certain strike of a call option, that might be a signal that others are trying to load into the name. And so what SoftBank did was effectively manipulate the signals, and that, maybe I shouldn't use manipulate, but they knew what the signals were for some of these stocks where it would garner interest from other investors. And those signals were effectively flashing green and causing everyone else to load into the name. And that's something that I think is a phenomenon we've seen a lot. I think the financial media likes to blame it on the Robinhood traders. Like, these are just novice investors. They don't know what they're doing. They're buying a lot of call options. But just to put the numbers behind it, if you look at the dollars of notional that were traded in options just this past week, it was something in the order of like 500 billion, which is 5x over what it was just a year ago. And so that, I think, is indicative of kind of the frenzy that's going on now. Oh, right. Okay, you have it. You pulled up there.
Mm-hmm.
So that blue line is kind of the representation of the options volume, and then the S&P is the black line there. So you see, like, that's not normal, and certainly this could be a contributing factor to some of the craze.
Right.
You'll see like the ramp up there is pretty much directly correlated to the increase in the S&P over the last couple months. So certainly a factor that I'm tracking very closely.
So as we saw this unwind of some of the volatility coming into the market, and then of course positions getting sold off, um, my question to you is, do you think that we are in a bubble?
Yeah, so I mean that's a great question. Certainly the $1 million question. I think the way to start is first define what I think bubble could mean. It's not necessarily like an environment where there's a lot of fraud or there's just like a euphoria and people are just loading into tech names, because of that. It could also be a sustained narrative that's been put out, and people are, subscribing to that narrative. So I guess that's the first thing is maybe I want to get your view on what do you define as a bubble, and then I can kind of react as to do I think we're in that territory.
Well, I think at present moment, I mean, there's a handful of stocks that, whether you want to call them tech stocks or high growth, there's a handful of stocks that are truly benefiting from the underlying narrative, which is, COVID has really hurt the environment for traditional businesses, brick and mortar businesses. Even say the energy space, really across the board, anything other than tech is really not thriving as well as tech. So I think that is the narrative. And in that narrative, you have this overextension and overhyping of prices. Now, of course, I don't really know where Tesla comes in, but it's just a hot stock, right? I
Sure.
certainly don't understand where, Nikola or all these other companies come in. But I think there's a couple different factors that are contributing to the quote unquote bubble theory, which is, you have the narrative, which is clearly defined, which is, coronavirus essentially benefiting some of these tech companies. And then on top of that, you have stimulus and a put on the market from the Fed. And in that situation, well, you basically have a floor for the market, and people feel, especially bigger players, hedge funds, professionals, feel much safer knowing that, well, if the market declines and regresses, say 10, 20, 30%, well, the Fed stepped up to the plate just like they did in March. So why wouldn't they do it again? It's
Sure.
election year. November's around the corner. The Fed doesn't want to seem like, the odd man out, not supporting the economy while, people are already struggling. So the narrative is there. Now you have to add to the mix of, the Robinhood traders and everyone feeling like they can now day trade the market. Well, you now have the excess of money and the greed really coming in. And this is the perfect, I think, recipe to create a bubble. Now, I wouldn't say that we're, I guess, unwinding the bubble, nor would I say we're at the top of the bubble. I don't really know where we are. Personally, I think we're like maybe 75% in, and I don't think we're too far away from, it popping overall. But that's what I think. Now, you think, I guess, on the other side, which is, well, as long as the narrative continues, it's possible that these companies continue higher and higher, correct?
Yeah, so certainly that's part of it. But I do want to. You touched on a lot of really good points there, and I'm sure a lot of your listeners are probably sophisticated in terms of their understanding of the market. But the way I frame it is, I guess, two ways. One, investing generally, if you're a value player, you're looking at cash flows. So how much is profit is a company generating over what time horizon, and what is the discount rate for those cash flows to get to a value, right? And maybe it's an oversimplification, but one element of the bubble is that our discount rate right now is being impacted by the Fed. And so if you have a company that's high growth, that has a lot of cash flows out in the future, those future cash flows suddenly get more valuable if your discount rate is lower, because you can give a company more credit for that growth. So that's one piece of it. So when you're looking at fundamental analysis, going back to the days of banking, or when I used to, make these pitch books all the time, the companies that have growth further out into the future, a lot of their value is tied to their terminal value, which is like, what is your last year's cash flow? What multiple do you apply to that? And if you discount it back, what is the future value of the company that is implicit in their stock price? I think that probably is playing into a lot of the attraction for tech right now. People are running DCFs on value names, they're running DCFs on tech names, and they can get to higher DCF valuations for tech just because the cash flows out in the future are, outrageously high. That eventually will mean revert when either A, they don't realize the growth that they do, or B, the multiples that they're putting on that terminal cash flow end up compressing for whatever reason, right? So those are the kind of two factors I'm looking at on the fundamental side. On the momentum and technical side, it's totally different, right? I mean, people that are investing in, factor-based investing, they're looking at companies that have run up, that have broken their 200-day moving averages and are continuing to plow upwards. It's totally irrational for them to continue to put money into these names, because the way their models work, once stock exhibits certain behavior, you put money in. If that behavior compounds, you put more and more money in. And then some of the elements that you were talking about earlier with SoftBank, where you see a lot of open interest and out of the money call options, and that drives dealers to buy the underlying stock, pushing their stock prices further. That, I guess I call it plumbing, perpetuates the cycle of the momentum factor. And so you have a lot of investors that are following their models to the T, and their models are telling them to buy more in these names. So I think it's perfectly rational. I think like they're following the methodology, that they're supposed to, but eventually that will mean revert. And I think that's where I guess I would define it as a bubble. These models, I think the underlying assumptions that are driving them are flawed. A lot of these names are being pushed up artificially by some of the mechanisms that we discussed previously. And eventually people are going to realize that A, the cash flows aren't what they are, or B, the multiples shouldn't be as high as they are, and then it corrects. And then you get into maybe a rotation. But I don't know, I threw a lot out there, but I'd love to know your thoughts on that.
I've been waiting for the rotation play for months. Been waiting for, value stocks, energy, financials. It seems like no matter how good the circumstance, no matter how positive the news about the economy, the money is just not flowing there. Or if it is, it ain't moving the stocks up, right? So I guess, I've kind of veered away from the rotation theory, because none of my alerts or nothing in terms of indicators or metrics that I look at to look for that rotation has triggered. I'm still looking at a flatlining of most of these financial stocks. You and I spoke about this earlier. I think the financial stocks, the energy stocks, most of them are representing exactly what's happening in the underlying economy, which is, SMEs are really struggling. People are actually still struggling. I think the unemployment rate is 13.8%, right? So the underlying economy is clearly, still recovering, and it would probably take at least, a good 1 to 2 years to get it fully back on track. We don't even know how the rest of the environment looks, that the landscape looks, with COVID still being part of our lifestyle. So the point is, in terms of rotation, I don't know when that's going to happen, right? I mean, you're right. At some point it will, but like, does it happen a week from now or a year from now, right? And if it happens a year from now, then what happens to these stocks that are, perpetually going up? Do they just keep going up further and further? And if they keep going up further and further, then at what point do we just define this as complete irrationality of the market? Is it, Tesla being, 1100x, 12-month trailing earnings? Is that what it is? Like 1100x, something like that?
Yeah, it's crazy.
So it's like, it's crazy high, right? I think that's the point. And so at what point do we define that as, okay, this is complete irrationality. No one gives a shit about valuations. Nothing else matters other than, Fed giving the market liquidity, putting a backstop on the market. That's it. My larger theory lately has been, I don't think anything matters anymore in terms of valuations, or if you look at this DCF or anything, I don't know if people are actually looking at the numbers, because if they were, they'd be like, this is nuts, right?
Yeah, I mean, it's probably that they are running the models and maybe not weighting them. At least the DCS, maybe they're not weighting them as much as they should, or the assumptions that are feeding those models are very high, or they're maybe divorced from reality. So that's potentially part of it. Yeah, I think in terms of like whether there's a rotation to cyclicals or if there's just a correction, a big part of that is what the Fed is doing. And people have this perception that there's a lot of money printing going on, and certainly there is. But if you look at like the last few months, if you look at how much the Fed is actually buying relative to, how much treasury issuance there is, I think right now they're on pace to buy like 40 billion a month. And they're going to issue 2 trillion potentially by the end of the year. So the Fed's going to be buying 400 billion of that. And there's 1.6 net issuance of treasuries between now and the rest of the year. So there's a lot of liquidity that could be sucked out of the market. And so if you think about what propped the market up in the first place, it was the Fed buying a lot of treasuries, keeping rates low. If that reverses and the US dollar, okay, you pulled up the chart, great.
Yeah.
If the US dollar has a move up, that can really, cause a correction. So I'd love to get your thoughts on, what do you think is going to happen to the currency?
I'm actually kind of the same page as you. I think you're pretty spot on that rates are, lowest that they've really ever been, right? I think this whole process, once we dove in right around 2008, 2009 financial crisis, I think the Fed kind of opened up this Pandora's box of lowering interest rates. And I think, what was it, 2017 or 18, when they bumped up the interest rates, I think that's when the market kind of took a bit of a tumble. And then again, I think, with Trump kind of pressuring Jay Powell, again, we went back to the same mode, which is going back to cheap money. And cheap money has kind of created this very risk-on environment where the Fed has kind of created the whole idea of TINA, right? There is no other alternative, that this is it. You either invest in the market or you screw yourself by a depreciating dollar. Now, obviously, the depreciating dollar is nowhere close to anything like Venezuela or Zimbabwe or anything. I mean, the US dollar is the world reserve currency for a reason. 78.5% of global trade gets transacted in the US dollar. So I understand that the whole idea of, dollar going to zero, that's all, BS, right? We are still, superior to any other currency. And I don't see any second runner up anywhere, even in the same ballpark. So if that's the case, okay, well, we get it. The dollar is the strongest currency in the world. But what does that mean when, rates are already low? We know that the Fed has basically created this environment of stimulus. When some of that stimulus gets pulled off, like you said, creating a vacuum, well, I would expect maybe people go back into, protection mode of going back into dollar. And if that's the case, we know that there's a larger inverse correlation between the DXY and, say, equities, or DXY versus crypto, or DXY versus, even gold per se.
Sure.
So I think, the way I see it is, you and I watch, Real Vision quite a bit, right? We know Raoul Pal often talks about, I think the bond market is really the market that is the arbiter of truth. And at present moment, that arbiter of truth is calling BS on this equities rally, or really the recovery. So if the bond market, especially the 10-year T-note, starts breaking out, we're at, 65 basis points right now. Yeah. If we start breaking, 100, 105, 110, well, then something's happening. Something is brewing that the other markets will probably be late on. Or it could very well be the fact that this is possible, that maybe this is the top, and the unwind starts in the equity markets, and then it starts snowballing, down into bond markets, and bond markets start picking this up, and they say, okay, looks like, the whole rotation is now started. Maybe the unwind has started of the equity markets. That's kind of my macro view of how I put those pieces together. I want to hear your view and your thoughts on that.
Yeah, no, I mean, first of all, you described it beautifully, so I don't know if there's much I can add, but in terms of what I'm looking at, just taking a step back, the health of the economy, really for me is driven by what banks are doing. Like, are they comfortable lending money to people?
Mm-hmm.
And if you look, and you may have the chart, but generally, if you look at, there was a chart out about lending standards, and lending standards have tightened. So even though there might be liquidity out there, if banks are not comfortable lending to companies that need to engage in commerce and recover, I don't think the recovery is real. So that's one thing I'm looking at. If you look at the bank stocks relative to the S&P, they haven't recovered. Yeah, so this might be a good illustration of it. If you look at the blue line, it's shot up in terms of the amount of banks that are tightening their lending standards versus not. So that's a clear indication that, the people that have the capital that are able to lend it out, they're not comfortable giving companies loans. What does that mean about the strength of the economy? I think that's the first sign. The second sign is, something you mentioned before. We need to issue a lot in terms of treasuries, and the Fed is not comfortable purchasing those treasuries at the rate that they were before. So that means a lot of liquidity is being sucked out of the market. And then three, the cyclical names haven't recovered. And so all those together, I think, are a sign that maybe A, the dollar could strengthen, B, that'll cause the equity markets to correct. And because everything is so correlated now, everything goes down. There's not, I don't know what the safe haven asset is.
You can't hide anywhere. I mean, we were talking about this earlier, in the past week and a half, I watched the dollar tick up hour by hour candle, and I saw gold pull down, Bitcoin move down to the same degree. And then I started seeing the sell-off in equities just earlier this week. Obviously, I think the equity markets are probably the last ones to kind of fall as a domino. But I mean, the correlation is insane. You have no hedge anywhere. You have nowhere to hide.
Right. Yeah, maybe not the most optimistic picture to give to your viewers, but
They understand. They know what they're getting into.
I guess, what are you looking at then to hedge in this environment? Like, are you deep into puts, or what are you trading?
I'm not into puts at all. My larger theory is that, yeah, I think at some point this bubble will unwind. I don't think it's time yet. I don't think it's time yet because, okay, let's look at it this way, right? We are so deeply entrenched in politics nowadays, especially with one of the most contested, heated elections ever. I mean, many people call this like the how you would view the future of America, if you will, right? How do you want the country to proceed going forward? Do we potentially take the path of populism, maybe with Trump? And again, I'm not trying to label him as a bad person of populism, but in reality, that's kind of where we're really headed, right? That's his MO. Now, if we're taking that path, whether whoever gets elected, Trump or Biden, at present moment, we're sitting at the beginning of September. Election is in 2 months. I don't see any reason why the Fed would not keep their same stimulative standards, if you will, going towards election time. And if that's the case, and the market already has a whiff of that, they know that every time, say the market pulls back, the Fed is going to do something about, I don't know, maybe going back into, junk bonds or investment grade bonds, or something. They're going to do something, right? They can't just sit back and be quiet. Jay Powell is going to come out next week, and he's not going to answer the question about the market being in a bubble. He never does that. You might have some vaccine news coming out. You might have some form of positive news coming. Something's going to come out, and again, get the people, get the wind back in the sails of the market again. And I personally think that the market is probably going to go up from here. if it starts retreating, and obviously, we hit some key levels, I think, this past Friday, even Tesla, you had this nice hammer candle right here. And you saw this pretty much across the board, right? Buying and selling was very uniform across the board. Like Apple and Tesla and Amazon, SPY, QQQs, everything got sold off together. And by the end of the day, it got bought back together. And I think, in some of your notes that you sent me, we spoke about how there's value at risk that's obviously being taken into account of what the dealers are doing on the back end. If they need to square off their books at the end of the day, how do they do that? Do they, rebuy some of their hedges? Do they rebuy protection on, long positioning in the market? I don't know. At present moment, all I can say is the trend looks like it's going up. Obviously it's very sort of simplistic to say that all dips are bought up, because that's literally what Twitter says. Dips get bought up. But the reality of the situation is, if you look at, the macro view on it is, well, what is the narrative shift to make the market go down other than the fact that the market is overextended? Well, there isn't one. I mean, I don't see one. Do you?
No, it's a good point. It's hard. You can be potentially right about a trend long term, but if you're wrong about the path in terms of like what it takes to get to your endpoint, then you lose a lot of money. And so really what I'm focused on now is just sizing my trades, making sure, if there is an opportunity to buy, I can make those purchases. So, having a little bit of cash on hand, just in case, something corrects more than I expected to. But yeah, it's tough. It's tough to trade in this environment. Maybe that's another topic. Like when you look at your portfolio and kind of how you're allocating across different asset classes or strategies, how are you thinking about that now? If your view is that maybe we're in a bubble, but we're not going to correct for some time.
So I definitely have, a good amount of cash on hand. Like I think if I start talking about, gold versus crypto versus equities, I keep, gold separate. Even though I invest in the GLD ETF, it would be part of the equities portfolio, but I'm looking at it as, from the standpoint of commodities. Now, in the world of one-to-one correlations where everything breaks down together and moves up together, I have no hedge other than cash. And it's cash that's already, technically depreciating in a sense, right? Because like we kind of talked about earlier, is the Fed has kind of created this TINA environment where you can't hide anywhere and you have nowhere else to invest in other than if you have, connections to emerging markets where you can start putting money there. And I mean, literally, like, I live in Colombia. My hedge would be, well, okay, I benefit from the fact that the dollar is still relatively strong against the Colombian peso. Property prices have come down here quite a bit. Businesses have, obviously taken a hit, probably more so than the US. So my hedge is a little bit different than most people, but most other people don't have the kind of access that we do. Maybe they could buy some EM, emerging market ETFs, but even then, the emerging market ETFs, they kind of look like the financials, ETF, like the XLF or JP Morgan chart. So like, where are you going to get yield? You can't get it anywhere else. So like the market is kind of positioned in a way where technically, yeah, you have to be a bit more risk on, unfortunately you have to take a bit more risk. And for me, I am definitely more so in crypto than I am in any other asset class. One, because I love the volatility, and as a trader, you kind of, dream of this environment. So that's been really fantastic. But to be honest, I don't know. I don't really know if I have a hedge in this environment that's proper. Maybe like some other precious metals, but I don't have that much experience to know how to invest in iron ore or copper,
Right. Yeah. No, certainly. Yeah, I think for me, given I work in the crypto industry, my natural hedge is that I'm working there. A lot of my equity is in the crypto space just by default of having stock options. And so in my personal portfolio, I don't have a huge allocation to Bitcoin or otherwise, just because a lot of my personal future wealth could be tied to the stock options in the company I'm working for. So that's my way I'm playing crypto. In terms of the my view in terms of like what the time horizon is for a correction, I actually am positioning in such a way that I think the dollar could strengthen over the next 4 months. And if that's the case, I am putting money into all the avenues that would benefit from that. So whether it's, puts on tech, specific names that I think will correct more than others, anything tied to inflation. And, I guess that's where I'm positioned, but I could be totally wrong about the time horizon and the path. So I guess I want to flip that back to you. Do you think the dollar could strengthen over the next 4 months, or you think it's something that'll happen longer term?
I mean, I think from a technical standpoint, if we're just kind of looking at this chart that I have here, I'm very big into technicals because I truly believe that the chart will start reflecting things. I wouldn't say the chart kind of leads the news or leads, fundamentals, but the chart gives you a pretty good idea of like, what is happening in the overall structure of the market. And I think right now, what this chart shows me is, okay, in the near term over the past, week or past month and a half, we have this kind of, falling, descending, broadening wedge, which is technically like a bullish wedge, meaning these kind of pop out to the upside. So that means that, let's just say it pops out to the upside, well, then the dollar gets stronger, and that means equities break down, that means crypto breaks down. Now, these wedges or trend lines or any of that doesn't mean anything, because Jerome Powell could, literally come out Tuesday and be like, all right, guys, we're going to do something, I don't know, crazy that's going to break down the dollar. I don't know what he's going to say, but it's very possible. And then this whole wedge just goes to shit. But for now, in the positioning of just the price structure, that's what it's telling me is, hey, it's time to be careful. You need to start, maybe going into a protective mode of going into cash. Maybe even, as a market kind of ticks up, let's just say in Bitcoin or gold or tech stocks, if the dollar starts to break out, maybe you're right. Maybe we need to get back into puts. Maybe I need to start shorting Bitcoin. Maybe I need to get out of gold. These are things that I would consider. And then on top of that, here's the thing, right? We're sitting on I think this is like a 10, 11-year trend line, right? This is held up right back from 2011. It's a pretty solid trend line. We're literally on the edge of it right now, So one could make the argument that, okay, well, and I'm sorry, this is a log chart. There it is. This is the linear chart, okay? So on the linear chart, you can see we have multiple touches on this trend line. So if we break this trend line, from a technical standpoint, okay, then we should be headed down further. And some of my levels that I'm looking for, if we're heading down further, we're currently at 93, essentially. I'm looking for 91, and then probably all the way down to about 88. I'm not looking beyond that because I don't really know, but that would be, the zone that I'm looking at. And if that's the case, well, then you've bought yourself a couple more weeks for, again, tech going up, crypto going up, probably gold going up. So that's kind of how I'm looking at it.
Yeah, that's certainly fair. I think the technical analysis here is probably right. I think more from like the narrative standpoint, whenever I see a lot of narratives come out about, oh, the dollar is going to lose its global reserve status, or, that the euro is handling the COVID crisis way better than we are. And the euro's, now it's the time for the euro to break out relative to the dollar. When those stories kind of compound and get into the ether of like the general populace, I think the short dollar trade is, ends up being crowded, and then, it could reverse. And so that's kind of the playbook I'm looking at. And if you back test it, I think Teddy Valley has back tested this, and he's found that generally the dollar corrects upward whenever there's a consensus trade around short dollar, especially around the dollar losing the global reserve status. So that's, I think, something I'm subscribed to. Do you think it goes to 88 before? Oh, sorry, go ahead.
No, I was just going to say, which is, the short dollar trade, you're absolutely right. I would say the FX world right now is probably short dollar. So that's just currency markets separately. And then, of course, if you add to that, portfolio managers having the short dollar and then say, long equities, long US equities, or long gold, long crypto, well, then it's a perfect, sort of how would you say, you kill 5 birds with 1 stone, right? Instead of 2, because you rip up the dollar and you are effectively destroying every other market that's inversely correlated with it, which would be gold and crypto and equities. So I think you're pretty spot on. And to answer your question, do I think the dollar is going to break down before it breaks up? Is that your question?
Yeah, that was what I was getting to. Yeah.
I mean, so like I said, from the technical standpoint, if we get to the top of this wedge right here, again, it's possible that we start, breaching a little bit higher. Now, obviously that could fail and we roll back over. But again, this is a month and a half, almost 2 months of a wedge that's being created. This is a pretty good base that the dollar has created. So if the dollar is kind of creating this kind of base, I don't know. I don't know if you do create a base just to roll over again. I think you kind of create a base to pop up a little bit and maybe roll down. Maybe if you meet some hefty resistance right here in this area, which is like 95, 96, it's possible that from there, maybe we start breaking down. So,
Sure.
I mean, the thing about, the dollar is, which to explain to our viewers is the dollar and the currency markets, by the way, they move way slower than equity markets and way slower than crypto, right? So the kind of reversal that you would want to see for the dollar, it is effectively within your timeline, which is maybe, 3 to 4 months. Because if it starts moving, to get most of the traders on the other side of the markets to get positioned or, realize that they're being squeezed, that'll happen in like a 2 to 4 month time span, right?
Right.
So I think you're right. Like, I think it's possible that near term, 3 to 4 months, maybe we do push up. But I'm kind of still looking at the markets right now as still riding very hot. I don't think, with what I talked about, election around the corner, Fed pretty much, being highly stimulative, I don't see any reason why the equity market shouldn't push up higher. And I think next week will be very telling because we had a big sell-off, right? We had a 15% or 20% drop in Apple, Tesla, Amazon, all these stocks. S&P 500 was down, I think, 4 or 5% for the week. So if that's the case, well, then next week should decide, well, do we then have continuation to the downside? Or does the market get bought up and then do we, grind up again? Because if it's buy the dip mentality and, if you're saying that most, AMs and PMs are looking at the market with their models and projecting that, well, their algorithms or indicators or whatever they're looking at are saying that, hey, this is an environment that we want to buy the dip, well, then what's stopping the market from heading up further?
Yeah, no, it's a good point. I mean, I guess the corollary to that is you said maybe the Fed's going to be accommodative and continue buying at the rate that they're supposed to keep the markets afloat. I guess, what does that rate look like for you? Do you think if they continue at the current rate of 80 billion a month, that'll be enough to support markets? Do you think that he'll have to, further escalate that and give markets more support? I guess how impactful do you think the Fed will be after their announcements on later this week?
I heard a really interesting statistic about how in June, when the Fed greatly decreased their buybacks, what was it, from like 200 billion a month or 200 billion a week? It was some ridiculous number. And now I think you're saying that they're at 80 billion a week, right? Or 80 or 40?
Yeah, something like that. Yeah. It's
something
much
like
lower
that.
than where they were. Yeah.
Right. So the point is it's much lower, right? And if it's much lower, and if the market is pulling back, well, then the Fed has it in their arsenal to, obviously they can't, decrease rates anymore. They have to go into that, same kind of buyback program that they were in previously. And if that's the case, well, then maybe the market is kind of trying to sniff that out. Like, hey, when do we pressure the Fed into jumping back into the ring? Because right now the Fed is, they're kind of in the side and they're saying, all right, we got your back, but like, let me test you how much you have my back and at what point do you step back in? Now, that doesn't necessarily mean that the Fed has to announce, they're going to ramp up their operations of buying back even heavier. It could really mean like a nod from Jay Powell of, I don't know. I really don't know what, I mean, it could really be a number of reasons, right? Why the market just feels comfortable. The only thing I could see the market going down is either you have maybe another black swan event, or the Fed actually goes back on their word or goes into a different policy direction, which I don't see happening. Do you?
Yeah, no, I certainly don't see them changing their tone. I think where break evens are right now, like I think it's around 1.7%. This is the 10-year break-even inflation rate. For it to stay at that level for, a prolonged period of time, they need to be incredibly stimulative. And I think it has to be above the rate that they're buying right now. And mix that with the stimulus bill, which is still being passed around, on the legislative bodies, but that's a lot of treasuries that they need to issue in order to support that. So I agree. Yes, the Fed will stay stimulative. They'll do whatever they can to make sure that markets are in order. But if they don't, I guess the rate of change is where I'm getting at. Like if they don't support to the level they were previously and something bad happens, I mean, I don't know. I guess the rate that they're buying is more important to me than the narrative that they're supporting the market. And that's what I'm watching closely.
Fair point. Are there any specific topics that you want to talk about? Because I kind of want to talk to you more about crypto, because I know you stated that you're working with a crypto company and you've been more involved in the crypto space. I wanted to get your perspective on crypto as someone coming from the traditional markets and maybe looking at this either from a speculative lens or maybe from an opportunistic lens of this could be the next best thing. So anything else you want to talk about?
No, yeah, we can jump into crypto. I'd love to talk about that.
Awesome. All right. So okay, first of all, how did you hear about crypto and when did you hear about it?
Yeah, I mean, so I was working in financial services for a long time. I saw, I guess, the benefits and the ills of the financial system from the inside, working both in private equity, restructuring, and a few other fields. And I thought that crypto was just interesting because it was something that could challenge the existing financial system. And I think the three ways that finance is supposed to work is that one, it's supposed to help people transact and engage in commerce. It's supposed to help them store their wealth. And it's supposed to help people transfer risk. And a good example of that is insurance, right?
Mm-hmm.
And so on all three of those fronts, I think there have been failures in the financial system. And then that's all being encapsulated in the growth of our money supply. Like our money supply has grown at an 8% CAGR over the last 20 years. And this year it's growing at 30%. And you can't have a sound economy. You can't invest in a sound way if your money supply is growing at that rate. And so
let's pull up so money supply. We can look at an M2 chart, correct?
Yeah, sure.
Okay. So I want to pull up the money supply chart and the velocity of money, right? So First of all, I mean, can you tell us from your standpoint exactly what is a money supply and what are we looking at when I look at a chart like this? Okay.
Yeah, I mean, I don't want to get into too much of the technical details, but basically, like everything is denominated in currency units, and if those units are growing, so for example, a company, they have a certain value, and that's denominated in dollars. If the money supply is growing, even if that company does nothing, their value is going to increase in dollar terms. And so that, skews the whole perspective of investing, because you can grow your wealth investing in a company that does nothing if your money supply is growing. And to me, that fundamentally, is a bit, I don't know, it's just weird to me that that phenomenon can happen. But if you look at the chart, like look at the direction of this chart, it's incredible.
Mm-hmm.
So I think that our entire economic system is based on central banks being able to print money and increase the money supply. But the other, and maybe you can go into what this chart means, but this is the counter to that.
Yeah. Well, for me, I had explained to you that I like to look at the velocity of money. This is this is the movement of money that we're talking about, in respect to, yes, we're printing all this money, but how much of that money is actually moving around? And in current terms, I think the most important chart in current terms is you want to pay attention to the amount of money that people are saving, which would be a complement to this chart. Did I get that right?
Yep, that's right.
Okay, so over the past several months, we've seen the government start handing out stimulus checks. That, of course, moves the M2, right? I mean, obviously it's gone up quite a bit, but it's been on that trend for several decades now, right? Now, the interesting thing that I found about the velocity of money compared to, say, the labor force participation was that if you look at the last several months post-COVID, post the crisis, you get to see, sort of an epic drop-off in, the velocity of money. And personally, I think this is one of the reasons that can explain that is people are actually going back into protection mode of saving cash, of saving money. And the money is not necessarily moving around or being devalued as much as people think. Did I get that right?
Yeah, no, I think that's great. I think another element to this is that part of the way money moves around is banks lend that money. So they're comfortable giving money to corporations or other institutions that need that money to invest in things like, CapEx and all the things you need to increase productivity. And this is another chart that's saying, okay, maybe banks are not comfortable lending, which is another sign that the recovery may not be as strong as people think it is.
Mm-hmm. So how do we tie this back into crypto, right? So why is it that you feel that crypto is an important element to solve some of the irresponsible or underlying issues of all that's happening in the traditional, financial or monetary policy or fiscal policy world?
Yeah, so I guess the core tenet is that crypto has, at least Bitcoin, has a fixed money supply. And so no matter, what central banks are doing and however many dollars are floating around in the system, crypto and Bitcoin specifically will always have a fixed supply. And so as you accumulate, that you're accumulating against a fixed supply of an asset, which if you think about, everything else, like gold, for instance, like that's pretty valuable. So being a scarce asset is valuable. A second piece of it is, unlike gold, you can actually transfer crypto from one country to another relatively seamlessly. And people think of that as, transferring from one wallet to another wallet. That has fees, that has friction. But I'm talking about literally crossing a border with crypto in your portfolio. As long as you remember your keys, which are like a group of 12 to 25 words, you can access your crypto from one country to another. And you don't have to declare it as you go across borders. There's no way governments can seize it. And that's pretty powerful. It's a way to transfer and store your wealth effectively. And the third part of it, which I was attracted to as a trader, which is, I think, maybe more interesting for your viewers, there's a whole ecosystem being built around crypto as collateral for trades. So in order to engage in the futures market in crypto, in order to sell from one exchange to another and make a spread profit on that, in order to market make, crypto is really, and Bitcoin in particular, is like really the collateral asset of choice. And the other asset is stablecoin. And so as those asset classes grows, people on the institutional side will get more comfortable trading crypto as an asset class, which I think now is still in its early stages. So as it gets more adoption, as retail investors get more comfortable engaging in crypto without having to know the underlying knowledge of how to buy and sell, there are a lot of exchanges now where you really just need Plaid to connect your bank account and you can buy Bitcoin. You can also go, through Square and buy crypto that way. You can go on Robinhood and buy crypto. So all these trends, I guess, will compound, and eventually people will get more comfortable trading and engaging in crypto as an asset. And I think that's pretty favorable, which will cause retail investors and hedge funds to get into the trade, which will further perpetuate the cycle. And so those are the things that you like to see as a trader. Like, are these self-reinforcing cycles where increased adoption leads to increased interest, which then leads to increased institutional buying and selling. So that's kind of why I got involved in it from a trading standpoint.
I like that. No, I think there's a lot of very unique points about crypto that I think most people tend to ignore because, they think of it as this new asset class that is, either overvalued or filled with scams or anything. I mean, anything negative that you could kind of point towards crypto, they kind of define it for the entire market. Like if one project was a Ponzi, they think the entire crypto market is a Ponzi. You know, was it like if that's like analogous to Wirecard in Germany that had that huge issue, right? That's like saying the stock market as a whole is a Ponzi because Wirecard had crazy issues with their accounting and books. And I guess the caveat to that is okay to play fair and devil's advocate. Well, I think there's a lot of newer ecosystems that are built in crypto, and a lot of them are kind of targeting, if you will, the average crypto retail investor who is probably looking at the market as a lottery ticket, if you will. And there are really no free lunches in markets, right? I'm sure you know this, and I'm sure our viewers know this, but unfortunately, a lot of people don't realize that until they lose a lot of money, probably all their money. Now, personally, though, this is the one time that in crypto, as an asset class, the average person, the average retail investor can front run banks and institutions and know about the newest pieces of information through something like Twitter. Like I can literally tag the developer or the founder of some random crypto project that's starting, or I can go into a Discord group or Telegram group and start talking. That is an amazing advantage, head and shoulders above what a bank or an institution or a hedge fund manager would have to do to sit down at a table, look at what the project is about and what you're going to do versus me being on Twitter as some random dude who's just reading about your company and asking you questions. So I think in that sense, crypto is truly the idea of, distributed wealth, the idea of, decentralizing and being able to invest in something that you do not have to be directly an accredited investor to get into. You can get into the early stages, but of course you have to realize that it's very risky. And add to that the fact that what you talked about, the ecosystem as a whole, Bitcoin is truly one of the most amazing things that ever happened. I think it's one of the most unique innovations that has come up in this current century. On top of that, you have a new asset class, a new innovative technology that's coming up that most of us are still, in my opinion, on the ground floor of. There's not a whole lot of crypto businesses or adoptions that are so widespread, that are common household names that everyone would say, hey, I own some Ethereum, hey, I own some Link or Bitcoin or anything. It's not that common, but it's common in a sense where you realize that someone who knows about Bitcoin or Ethereum or crypto, they have somewhat of a incentive to see a system like that succeed because they know what it feels like to have the financial system not working for you. That's what I think. Now, living here in Colombia, the most unique thing that I've seen is Bitcoin stickers just randomly, like at a stoplight, on a mailbox, on bicycles, anywhere. And I think to myself, what the hell does Bitcoin have to do with, Colombia? But then I think about and I look at, some of the expat communities I'm a part of, some of the Colombian communities I'm a part of, and I think these are the people who understand, what it feels like to have the government or the financial system not working for you. And on top of that, they realize, their currency has gone into full on, devaluation or inflation mode, whether they look at the parallels of Venezuela or whether they've seen their own currency be devalued. And if we're kind of relating this back to traditional markets, well, I mean, if we're doing all this printing, none of this has ever ended well. History obviously doesn't repeat, but it does rhyme. And one could as a betting man, you could make the argument that, well, with all this Fed stimulus and this printing and giving away all this money, you've already widened the wealth gap. You've been doing it for decades. You're devaluing the currency more so. And so what is the one saving grace that's out there that could maybe save us from, the discretionary spending that the Fed is doing, or anything that they're doing in a sense that is not benefiting people, and that's Bitcoin.
Yeah.
Right. That's
one.
So that's kind of where I come from with Bitcoin. Is I look at it from the speculative lens as much as I can. Of course, I'm sure I will trade and be part of projects that may not end up doing so well, but I would rather trust something like Bitcoin, and I would rather be invested in things within the crypto space, because I know that people in general are not seeing the scale at which this could explode to.
Sure. No, and you bring up a great point. Like, we're very privileged to live in, well, I guess we've both lived in the US. We're very privileged to be in a country where we have the global reserve status, and we haven't really seen like the impacts of the Fed inflating our money supply, right? There are other countries and places like in South America where they viscerally felt that. Like, they suddenly they've seen their wealth destroyed like over a matter of weeks, either due to currency controls or government policies. And so in countries like that, Bitcoin is really an alternative which they can use to store value. So that's one thing. And another thing that maybe is related to that, a lot of banks in South America or otherwise, they have a lot of power, not only in that they control your wealth, they also control your credit score. And so if you think about, for someone who makes a bank account with Santander, if they ever want to leave that bank, they also lose all their credit history. They don't have like an Equifax in South America where, they consolidate, your credit history into one centralized platform. That gives banks a lot of power. And for someone that just wants to store their wealth and build a history, they can't do that if they switch banks. And so they use crypto as a way to maybe onboard to a financial system outside their own borders. So you can get a bank account in the US effectively through using a crypto account. And then that's one way to store wealth to protect against some of these things. You don't need a KYC check to do that. You don't need like a full, fulsome credit score with all your spending patterns. You can, as long as you have crypto, you can store your wealth. And so that's another benefit that maybe people discount with working in the crypto rails versus in the banking rails. So yeah, another point I wanted to just add to what you said.
That's a solid point. And again, you're right. I mean, we are very fortunate to be in the Western society. I think the one thing that has kind of humbled me by living in Colombia is realizing the financial infrastructure, the banking infrastructure, even just the overall economic infrastructure is nowhere near par to what the US has. But I also know, I think the Colombian government has been very, very supportive and responsive to things that are happening, let's just say widening wealth gaps that have occurred previously, and they're trying to close those down. Let me give you a perfect example. There are these communos, so we live in the mountains, and there's people living on the hills. Okay. And most poor people, they typically live on the hills. And so the government, after Pablo, they started to realize, okay, well, these people are still there. Just because Pablo is gone doesn't mean that these people are not going to commit crime or anything. So how do we ensure that these people don't commit crimes? Well, they started building schools. They started building these gondolas that connect the top of the mountains down into the valley. They started building actual escalators in the mountain so people can get in and out of the mountain area easily. Because the thing I think that, and I don't know what makes it criminal, but really it's desperation, really, right? It's a desperation act for wanting to put food on your table, needing money to take care of yourself, your family. And so I think the government realized that pretty early on, and they started to connect the people from the outside areas into the local economy. And what they did was they had to, of course, tax the wealthier, brackets a little bit higher. And I think the cool thing about that was the wealthier people, as far as I've heard, they didn't mind that because they were like, okay, well, we got to live in this city and I'm not trying to get robbed or killed. So, okay, tax me, make sure the poorer people have better infrastructure. And so now you see, people in the poorer areas being a little bit more introduced and part of the local economy. And they don't feel like the world is against them or the government is against them. Versus, I think in America, it's a little bit different that the wealth gap is widening. And though we are now, right now, at least not experiencing the after effects of what it feels like to print money, the Fed has kind of created this monster of printing money and handing out these stimulus checks or flooding the market with liquidity that I think the market is addicted to now. It's like Japan, right? I mean, you from the macro side, you understand this more than I do. The Bank of Japan, or pretty much the central banks there, they cannot stop, and Japan has pretty much been in stagflation mode for the longest time. So I don't see why the U.S. won't go that same path if we don't, drastically change how we conduct business, whether it's Fed intervening in the markets, whether it's with stimulus checks, whether it's the wealth gap widening. So long story short, I mean, the way crypto comes into all of this is it is by definition, an asset class, especially something like Bitcoin. It's trying to do its best to hand over the reins, hand over the powers to the people. Now it's up to the people. If they want to completely fuck it up, then that's fine. I mean, then at least people will take responsibility for that. But at least at present moment, you don't have a bunch of old white dudes controlling all this power and all the wealth in the country, making the decision for 350 million people, right? It's much more different than that. As you said, I mean, it's Bitcoin itself is an asset that has a fixed supply. And not only does it have a fixed supply, but the supply itself is depreciating in terms of the amount of Bitcoin that gets mined changes on a 4-year halving cycle. It's like it has all the characteristics to become money, to become a store of value. And so I don't see why, the traditional financial world, with how the monetary policy has been going, cannot intersect with Bitcoin potentially at some point taking over.
Yeah, no, that is first of all, I just want to say, like, it's so cool that you have that perspective living, outside the US to see some of that stuff. Certainly it's a big reason why I got into crypto, because the people involved are just so multinational. They're from different places, all of different life experiences. And so you don't, I guess in other core financial services type roles, I guess I didn't see as much of that. And because they have all these different perspectives, they're really bought into the core philosophy of why Bitcoin or cryptocurrency exists as a challenge to the core, financial system. So that definitely is a big part of it. I think the second piece that you said, it could succeed as a store of wealth. It could succeed as a currency, but I don't think it needs to succeed as both in order for it to go up in value. Like, certainly if it just stays as a store of value or a way to, trade across borders or send or remit value from one place to another, even if it just does that and the adoption rate continues at the rate that it's going, it'll be wildly successful, just because of all the other characteristics you mentioned. Now, eventually, I think, yes, I would love it to be, an alternative to the currency system. I don't know that it'll get there in my lifetime. I hope it does. But if it just allows people to store their wealth, and if it just allows people to challenge the governments that potentially could be manipulating their currency or, impacting their way of life, I think that's a huge success. And if there's anything I can do to make that possible, it's certainly something I'd want to do. And that's why I left kind of the more lucrative roles in restructuring and private equity to join the crypto space, because I love what it's doing in terms of challenging the financial system. But yeah. I think I echo your sentence exactly.
So listen, I think we've had a great talk. I want to pull up your blog and kind of plug that real quick because I've really been sort of enjoying reading. Every time you send the posts on our Facebook group that we're a part of. I like to read exactly what you're looking at from the macro standpoint, even from the micro standpoint. And I think you have really good insight. So where can people follow you? So on Substack, they could just look up Rishabh's newsletter. That's it.
Yeah, so yeah, you can do rishabdas.substack.com. That's my blog. There's also potentially a link maybe that you'll post somewhere with a shorter URL. But basically what I try to do in this blog is, I've come from a variety of core financial services roles. A lot of what keeps people away from finance is the jargon involved. And so, you don't need to know everything about multiple expansion and liquidity to understand like what's going on in financial markets. So my blog is really to condense a lot of that jargon into something that's easily digestible for people that either A, don't have a financial background, or B, maybe that they're in finance, but they want more quantitative technical analysis behind what's going on in markets. So I try to do that in my blog. And the second piece is I try to put a lot of charts, a lot of numbers, just to quantify things, and also give time horizons for if I'm doing a trade, kind of what I think the time horizon is for that trade and how it'll play out. So I appreciate you
Perfect.
plugging the blog.
Yeah, of course. No, I think your blog posts are really great, and I look forward to reading more of them. Are you, by any chance, on Twitter or any other social media platforms that people could follow you on?
I am on social media, but given I'm in the crypto space, I actually keep all that pretty locked down.
Got
Just
it.
because
Got
there's
it.
more scrutiny being in the industry, I don't give those out as much. But yeah, I'd love for you guys to follow my blog.
Perfect. Perfect. Awesome. Well, listen, man. I definitely want to get you back on again. I love these discussions with smart, knowledgeable people like yourself, and I think when two people like you and I come from the traditional, financial background, or at least, for me, trading the equity markets and then coming into crypto, I think we come in with a very unique perspective of not just, blindly looking at the crypto market, but seeing truly what value it adds. And then on top of that, of course, discussing equities from the vantage point of now being in crypto also makes things, equally interesting. So definitely let's get you back on again. I'm really glad you're writing. Keep it up. I really enjoy it. And yeah, until then, I guess we'll see you soon. Yeah.
Yeah, absolutely. And thank you so much for having me. I really enjoyed it. And yeah, I'd love to be back again.
Awesome. All right. Well, you take care, man.
Thank you. You too.